o'clock. Let's get started. Mr. Computer, please.
Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither Philstock, CSW, nor its affiliates, nor any of the respective officers. Personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. CSW provides education and training services that are meant to teach you to the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on a specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any loss you may incur as a result of information discussed in the media are identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone.
All right, fantastic. Now let's see. Boom, 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 there. Okay. And I'm recording, and everything looks good. All right, cool. Just us, right? Oh, and Ken. Ken showed up. All right. Now, it's crazy. It's Christmas. No one is anywhere. It's like so quiet on chat and everything. But it should be. Well, first of all, we cashed out, so, we don't care. And second of all, it's like it's holidays. If you have a good year and you can't enjoy yourself at the end of a good year, then you got real problems, and then money isn't the solution. At a certain point, you got to step back once in a while and enjoy yourself. And take a break. Say, I deserve a vacation, especially if you're like an independent investor and you just having a good year and you make 20-25% a year. You got to say, geez, why don't we do something for December? Why don't we just park ourselves in neutral for the accounts? You don't have to cash out, but just fed yourself, and then take a nice break and go do something. I mean, what's the point of having money otherwise? All right, so that's my speech for that. I'm going to Vegas next week, so screw you guys. Get out of here. I'll still be calling. I'll still be working, but that's actually one of the good things about my job is I can do this from anywhere as long as I put in some time in the morning. And Vegas also, because Vegas, I'm done with my day at 1 o'clock, so all I have to do is really work until lunch, and I'm done. So I like it out there. Anywho, and they got all night to see shows and such. So where are we? Market, how are we doing? Okay. So this morning, let's see. Let's go back to where we were. Here, look. When we're not, when we're bored, we can still make money. Not when we're bored. When we're out of the market, we can still make money. And so yesterday, on in the morning before I write the morning post, I'll make some comments in the previous day's chat. So until the morning post is up, which is usually about 8:30, we're still using the chat from the previous day. And here's my notes to the members this morning. Kind of huge, isn't it? I mean, you don't need that big, do you? You can still get the gist of it. All right. So, that's me. Now, of course, it says 6:39, but that doesn't mean I will. It's like I'm up much earlier than 6:39. It's just that this is when I start writing after I've done all my reading and listening things. Anyhow, so at 6:39, I said getting the pre-market bounce, which I think we should bet on. And it's a nice chance to short the Dow at 24,850. So now what was I looking at the time? Here's the Dow. It's a 5-minute chart. And here, see what happened? We had just spiked up, and the Dow was up about 100 points. And look how much time we had to short it this whole time here. It was shortable, so plenty of it. Oh, I'm sorry, 850 is way down here. So when I called it, I was like, yeah, that's the line I wanted to short at. So I'm sorry, so the line's way up here. So even after I said if it goes, I mean, well, I wasn't clear on that actually. So what did I actually say? Okay, tight stops above the line. So I probably should have been clear about that. But what I mean when I say that is, here's my thing. Is, I think we do it every day, so I guess it's clear enough to the members. But I mean, that's going to be our shorting line. So below that line, you want to short, and above that line, you want to stop out. So it came back down properly here, and we got 24,850 at, just there on the open. So it went up higher. And, frankly, if I had shorted one, I would have stuck with it until it hit 24.9. And then I would have added one to average 24.75. But I don't remember when I bought the first one. But I had 4 short? Well, I had 4 short in the end anyway. And so I had 4 short, and then when it got down here, I was perfectly happy because we made $1,600, which is $400 per contract, and we cashed it out. There's no need to be greedy when you make that kind of money. I mean, you made $1,600 in like an hour. And on the S&P also I made another $400 on the S&P. So it's like $2,000 shorting in a relatively short amount of time. So, what else do you need? If I'm going to if I have to show up and play the market, then I'm going to make a little bit of money on the futures. And that's what's great about the futures. You can do that by just watching something. In fact, in February, there's a Traders Expo in New York, and they're having I'm teaching some kind of master class. I don't even know what it means, but apparently people are going to come to some class, so I'm going to teach for a few hours. So I'll let you know when I find out what it is. But they invited me to come and do it, so I'm going to. And they also want me to participate in a challenge. They want all these top traders to get together. And I was trying to explain, it's not how I trade though. I don't believe in that kind of trading. To sit there from the hours of 9, from the market open from 9:30 till 11, you have an hour and a half to make as much money as possible. I'm like, that was the exact opposite of what we try to teach people. But I asked them if I could do futures, and they didn't tell me whether I can or not. Because I said, well, I'll do it in the futures. I said, it's really the only way I usually day trade. I don't day trade stocks and things like that. But the futures, to me, look, it was up. We were up about 100 points here. And the way it works for me in the morning is I come in, I read the news, I look at the market, and I say to myself, is this justified? Is the move from here to here justified by what happened since last night? And no, it wasn't. That was my attitude. So if I don't think it's justified, I'm going to short it because I figure when real trading starts with some volume, look, here's the volume that took you up 100 points. And here's the volume that took you down 100 points. All this volume together doesn't add up to this volume. What they do is that there's all the people who want to sell here and get a good price, they jack the market up overnight, and then when people come in, they see it's up 100 points, and they find all the suckers and they sell. And they dollar cost average themselves down, so they still get out with good prices. If they started here with this kind of selling, the market would start going down and down. And meanwhile, these guys probably have tons of stuff to sell. So you'll see that every night in situations where big boys are trying to sell off the market. They'll jack it up, sell it off, jack it up, sell it off, just constantly. So it's a big scam, and I'm glad we cashed out because I don't even want to deal with it right now. It's fun to watch. But anyway, back to the futures. So for the futures, it's easy though. It's just you read the news and you say, is this really justified? And when we dropped 100 points, I said to the guys, I said, I got to, I said we got to sell here. Well, here I'll show you on Wednesday. Control F. Monday. So what I said. Nope. see where I said it. 11. Oh, so many things. Wow, we have a busy chat room. All right, wait. Here. Roaring oil. Oh. Oh, it was that soon. I didn't realize how soon it was. So at 9:45. So really, we made the comment I made on going short was at 6:30. So at 9:45, that's why it seemed like a long time to me. I thought it was much later. At 9:45, I already made the comment. I said, we on the indexes, I don't know why, but I had a bunch of shorts taking $1,600 and running on YM, as I have no idea why we're falling. And if you don't know why you're falling, it's the same thing as if you don't know why the market's going up. It's like it's probably going to change. There's no catalyst. It's just falling for no particular reason. And the next thing we did is we looked at where the bounce lines were for each index. Here we go. Okay. Oh, good. And they've updated, so you can see what I mean. So I said the indexes seem to be weak bouncing. Now, if they're weak bouncing, that means that they're not making strong bounces, which means they're not breaking back up. They're not going to make their usual V. So I said this at noon, and so far it's playing out. So the 5% rule is not that complicated. Now, usually we play it from consolidation to consolidation, but when you're in an intraday mode, you really just kind of play it basically from spike to spike. So I used 24,890 up here as a spike, and I played it to 24,740 down here. So it's 150 points was the drop, and that means that 20% of the drop is a weak retrace, 30 points, and 40% of the drop, 60 points, is a strong retrace. So from 24,740, we looked at 24,770 and 24.8. So what you look for here is a strong bounce, and look how it hits it on the nose. 24.8 hit on the nose is a strong bounce line. Okay, that fails. If that fails, your next test is 24,770. 24,770 is right. See how it falls to here? It hit the weak bounce line. Then it comes up a little bit, but it doesn't make the strong. Comes back, tests the weak bounce, fails, and now it can't get back over the weak bounce line. So the indication here is that we're going to go lower. And on the S&P, we were looking for 2683, and see we're right there on the weak bounce, and 2686. And see how 2686 is top over here. You know, understand that we predicted this. We didn't predict it. I mean, it's not about predicting. It's just math. There's no prediction here. The 5% rule is a very hard and fast mathematical construct that happens to work incredibly well, especially in a bot-driven market. And this is a very bot-driven market. In fact, I noticed on the S&P that the Dow dropped 150, the S&P dropped 15. And that's because the S&P is 1/10 the size of the Dow, and they both moved down exactly the same amount because a robot is trading them both using the same formula. That's a good indication that these things are really synchronizing out. With the NASDAQ, we were looking at 64.85, which we're below now, and 64.95, which is exactly where it failed. Now, isn't that ridiculous that I can sit there and write this ahead of time and it plays out? That's how, and the reason I can do that, though, and I don't want to bore people by going through the same story over and over again, but the reason I can do that is because my father and I worked on some of the original trading programs at the stock exchange back in, for the Wall Street firms. Not for the exchange itself, but for all the investment banks and stuff, because everybody wanted to get an edge on each other. So we used to consult on these projects back in the 80s. And my father was a programmer. my father was one who knew all the programming and stuff. I understood the bankers. So I would be like his translator. So when his firm went in, they would use me for like consulting because I would be able to, I understood enough about programming from my dad to be able to talk programming, and I understood enough about banking to be able to talk to the bankers. So I could kind of sit at a table with all these guys and figure out like how to explain to each side what the other side is saying in a way that made sense to them, which actually made me very valuable. Anyway. But what I got out of that from attending all these meetings and then watching the implementation process at various firms, because every firm thinks they've got the special sauce and they think they're going to beat the other firm and they've got a better idea and a better program and so on and so forth. But the reality is that all the convergence of all these people trying to run all these programs to beat each other and putting in their own inputs and making their own ideas, what happens is that the programs tend to coalesce around certain junctures, and they start bumping into each other and hitting each other. And of course, we couldn't talk to anybody about what anyone else was doing. I wanted to say to them, you guys are all idiots because you're just basically, you're all canceling each other out with all these smart trading ideas you have. But the bottom line is that what happens is you'll see predictable mathematical patterns starting to form in the indexes, and you see it through observation, because what happens is when you see a consolidation point, and of course the more trading volume you have, so indexes are the best, the more trading volume, the easier it is to see. But when you see these consolidation points, you can then run these math formulas, which is not that different than Fibonacci retracement, but I just run these very simple math tests. And then we can predict their behavior, because by observing one or two consolidation points, that means that there's a couple of programs bumping into each other and trading in a certain range. Once you know that range, you can then extrapolate the next bounce point and the next bounce point from that range. And that's all the 5% rule is, and we teach people how to do that. So in the NASDAQ, we hit it on the nose. And now the Russell, I said, it's the bounciest, and you got to throw out the data on the Russell, even though it's still 1540 and 1542. Is that right? Yeah, so the Russell's above, but I said you can't use the Russell because the Russell, you have to also understand your index. The Russell is the most erratic and easily moves up and down 10 points. So how can you sit there and talk about they only had a 10-point drop, which is meaningless to the Russell. So trying to say it's going to stick within 2 points of anything is absurd. You have to observe the Russell over a much longer time period. It doesn't really work for intraday trading. But the other ones are nailing it, and they're nailing it in a way that currently indicates that we're going to have a down close from here, that we're going to move lower. And the dollar, I actually like long. If we get back over 93 is way up here though. I like playing the dollar long over 93. I don't mind. I wouldn't mind playing it at 92.50 either, but this is sort of in between, so I just basically stay away at the moment. So let's see. Pot's now legal in Vegas. I haven't had pot in so long. You know when I stopped doing pot, I was never a big, well, I'm sorry, take that back. In college, I was a pothead. I smoked a lot of pot in high school. After that, though, it didn't follow after college. I wasn't big into it. But I still smoked for, like, concerts and things like that. And what stopped me from smoking pot was when I had my first kid, and we were sitting at home and we smoked something and we were watching a movie or something like that, and something happened. I don't remember what it was. It wasn't a tragedy, but like an emergency happened. Something broke or something fell and involved, and Maddie got hurt or was crying or whatever. And I wasn't stoned, like I couldn't function, but I was high, and I was like, oh, I can't do this. I was like, I can't do this. At that moment, I said, I'm a father. I cannot do this. I have a 24/7 responsibility to be able to deal with an emergency. And that really was the reason I stopped smoking. I just decided, I said, I can't do this. I can't have somebody who depends on me, whose life is in my hands, and take those kind of chances. And I know a lot of people do it and don't worry about it and crap like that. It's just a decision I made at the time. That's what stopped me from smoking. I just said, you know what, I can't be non-functioning. I don't drink either for the same reason. I drink, but not to any major point. And again, it's just the same reason. I feel like, I don't know, I just feel such a responsibility to be there for my kids no matter what. You know, Tina, I think, can take care of herself. You know, she's a big girl. But the kids. So that was why I stopped. So I even if it's legal, I don't think I'd be going back to it. Although now that I'm older, my kids are out of the house, maybe time to see Star Wars the right way. You know, as it was intended. So what's rolling up? Now he's talking about rolling something. Oh, wait, a Baba. So speaking of pot, okay, so we're going to roll a Baba, big fat one. I'm in the January 218, 170, 190 spread. Any rolls that was good to you, possibly reduce the spread, blah, blah, blah. Okay, so first of all, Naomi, I am concerned, Naomi, that Alibaba is not a total scam, but they're exaggerating their thing. And the reason that happened is because on Singles Day, they claimed some number. Let's take a look. I'll tell you what it was. I'll explain to you why this is even ridiculous. Alibaba Singles Day. Okay. $25 billion. That's what they claimed in one day. So I thought about that, and AMZN. An Amazon sale for the entire year, $135 billion. That's 365 days. So they're averaging 300 million, 400 million a day. Alibaba's claiming 25 billion in one day. Amazon has 300,000 employees. Baba has 50,000 employees. I don't care how much better a Baba employee is than an Amazon employee. I just don't see it. I don't see how that number can possibly be true. I don't care what kind. And by the way, if you ever look at Alibaba Singles Day, let's see a picture. I'll show you. I'll give you. Here's another reason where I think it's a crock of crap. Where is it? Here you go. This is no bullshit. This is Alibaba's fulfillment center. Okay? How are these people doing $25 billion worth of stuff in one day? It makes no sense. So that was a big red flag to me. I don't see how it's possible that, you know, an operation. Again, I'm not saying it's totally inefficient or anything like that. I'm sure it works for them. But the bottom line is there's nothing here so special. It's not like the Jetsons where there's some robots, you know, throwing out 1,000 things in a minute. I mean, look, there are multiple pictures of this thing. This is what their operation looks like. This is not what Amazon looks like. See this? All right, meanwhile, this guy, I want a doctor to look at this guy, okay? He's wearing like a heavy coat. He's got to be hot. I don't understand why he needs a heavy coat in this kind of weather. It's because Singles Day was in like a few months ago. It's like it was not that cold. Anyway, come on. All right. I mean, come on. Do I have to actually explain why this doesn't make any sense? So how are these guys doing $25 billion? Let's see. Amazon Fulfillment Center. Again, I'm not saying Amazon's better or worse. Okay? This is Amazon. Notice the slight differences, though. See how they got things stacked up, and they've got Wow, I don't even know what that is. I don't even understand what they're doing there. Look at this, robots and all kinds of crap going on, blah, 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 blah. Again, Amazon, 300-something thousand people, Alibaba, 50,000 people. Amazon has 300,000 people and 400,000 robots. Alibaba just has 50,000 people sitting on the floor looking at packages. It doesn't make any sense at all. I just cannot even begin to get my mind around how that can be a true number. So, given that, it made me very, very concerned about Alibaba in general. And I don't know, it just bothers me too much to play them. I'm not going to short them because they've been putting up stunning numbers, but I'm concerned the numbers may not be true. I know it. In fact, see, there you go. And they come and see now after posting those kind of numbers for their Singles Day, they go down. That also makes no sense, right? I think they're lying. I think they're covering up, some disappointing something. But look at this. It's so unnatural too. Look at that. So this company is up from 86 to 1. It's up 100% this year. It's insane. So I know that's not what you asked, but I think it's important you know my opinion on Alibaba. It just happens to be one of those ones that bothers me. So you're in the January 218. So it expires soon. Oh, I see. But you're 170. I didn't realize it came down so much. All right. Well, you're screwed. Okay. I'm sorry to tell you. You got the 170, 190 spread. You should have, unfortunately, you should have probably cashed it out a while ago. BA. Oh, I'm short oil, by the way. We never got to that. I said one thing I am short is oil. No. Where is oil? Well, it's not working for me. I'm down $60. I had the one short contract, and I was looking to short at 58. I came in at 59, 57.90. Theoretically, I would add another one around here at 58. But I don't have a lot of conviction for this short. I just think based on the report today, there's no particular reason for it to be jumping back up over 58. I said I would rather be short at 58.50, but I don't see it getting that high, so I just want to take a poke over here and see what happens. So I'm just short one contract over 57.90. That's the only open trade I have. The indexes, who knows what they're going to do. It's the easy money was made. So, once the easy money's made, I kind of lose interest in trading again. So I don't want to jump back in. Gasoline, there's no reason to be so high. Gasoline is, there was nothing in that gas report that was special. We'll look at that next, though. Get back to your Alibaba. So what do we talk about? January? So the 170s is 660. The 190s are, was it 170, 190? The 190s are 65 cents. And what was your question? You're in the one to any rolls that look good to you possibly reduce the width of the spread. See, unfortunately, Bob has come down significantly. It's a shame because you could have cashed it out for probably most of your money over here. And unfortunately, in the last, I don't know how long you've held it, but the last month has not been kind to this spread. So, I guess actually in my mind I was already answering that whole question. So the background was important because what I'm trying to say is I would just I would cash the 170s, let those things expire worthless, or, the 65 is not a big deal. I would not get back into a bullish trade on Alibaba. I don't believe in it. I believe there's something wrong over there. I think there's something weird about that company. And maybe I'm wrong. I'm not saying to short them because it's too dangerous to short, but I'm saying if somebody makes a big deal about announcing a number that I can't possibly believe is true, then I have to question everything that's going on in that company. And I wrote this up at the time. Nobody else followed through with it. Nobody else picked up on the concept. I saw no other articles about it. I did the math. I can't see it. I really can't. Let's see, the company profile says China retailing, China marketing, China retailing, computing, commerce, wholesale. So in other words, here's the thing. They make more money from marketing, from, like advertising, like Google does. They make more money from advertising than they make from selling actual merchandise, like Amazon does. Amazon doesn't make money with the advertising, they make money selling merchandise. So their business, so by inflating and lying about their numbers, so the retail commission is here. By lying about the number of the amount of money the retailers are doing, they encourage more advertising. So there's the motivation for doing it. And frankly, it's easy for them to mislead as far as the amount of sales they do, because it's hard to check, because they're really only, profit-wise, they're only booking the profit from the sales. So they could say, well, it's $25 billion, but we only made a teeny bit of money on it. It's just one of those things where you make a lot of commission. So you'd have to go and check each individual seller and whatever. So to actually check into that is difficult. But I just don't believe the numbers. The numbers are so outrageous, I don't see how they're possible. Treefus estimates that they're only worth $135. So honestly, I would call this a stay-away stock. I wouldn't look to salvage your thing or do anything with it. I think if you got your money back, just be happy, and next time learn a lesson, because if you had it when it was up at 190 and you failed to do anything about it as it fell $20 on you, that's no good. Okay, that's next time you got to learn to handle the spread better is the thing, and pay more attention, because you could have stopped out with that thing for a nice profit. Now the bill is. I don't see the tax bill. Some reporter just called me, and I was just talking to her about that. I don't see how this tax bill does anything more than where we are. I think we're already up as much as you can be in anticipation of that. And this morning I referenced that I wrote this up a week or 2 ago, 2 weeks ago, I think. Where did I write it? We did the math on November 29th. There you go. See. So, all right. So this was, I think we talked about this in this day's webinar on the 29th. But look, my point was, this is ridiculous. If the market keeps going the way it's going, we will all be billionaires. That's what I wrote here. We will all be billionaires, because there's an insane amount of gains. In fact, here, I'll show you something right now. This morning, I know I'm bouncing around a lot. I'm sorry about that. My brain's like that. So this morning, as an example of how ridiculous the market still is, when I wrote that article, which is now floating around, make it smaller or something. Okay. Well, when I wrote this article, we happened to have talked this day. Because as an example of how ridiculous things are, I pointed out that this little portfolio, which we keep for the Money Talk people, so it's an untouched. The reason it's a good example is because I don't touch this portfolio because it's for the TV show. So if I don't have a TV appearance, then it doesn't make any changes. So I left it on 9/6, and the portfolio was up 70% of the year. It was up back on. I don't know. Was it September 20th? We published the money. Okay, so yeah. So on September 20th, we published this portfolio, and at the time it was up 18%. September. So October, November, and here's November. So 2 months later, it went from $59,000 to $85,000. 4 positions, no touching them at all. Went from $59,000 to $85,000. Then, as ridiculous as that was, a month later, it's at $92,000. And it doesn't stop, because this morning, now, hours later, literally, what time is it? 1:30. So I wrote that at 8:30. So 5 hours later, It's now at 94,850. These positions right here that were at 92,780 are now at 450. So that's about a couple of thousand more dollars that added to this portfolio today. All right? So, if I were Donald Trump, I would tell you I'm the world's greatest stock picker and only I can do this. It's bullshit. It's wrong. This is not how you make money. There's something broken in the system when you can make money like this. It's crazy. And the economy will ultimately explode. You can't just hand out money and randomly enrich people. And yes, I'll take some credit for picking good positions and setting up a good trade and all that. But at this kind of pace of money gains, and it goes to the Bitcoin, the Litecoins, all this crap that's going on, the Bitcoin Cash that we just cashed our Bitcoin Cashes because they got stupidly high. That's another funny thing. We had these Bitcoins. We sold those because we sold our last one yesterday. In fact, when it came back up. But then we still had, for no reason, it was a gift because Bitcoin split a couple of months ago and became Bitcoin Cash and Bitcoin. So for free, we got Bitcoin Cash, and we were just sitting around, and those we kept because they were only $1,000 only. So we for free we were given $1,000 for free with Bitcoin Cash for each coin. So today I said to Greg, I said cash those, because that's insane. Greg's running PSW Investments with me. So I said that I said cash those. That's just stupid. I'm like, it's like free money. We didn't even do anything. We bought Bitcoins, but we were handed these Bitcoin Cashes. Like they just give stuff out. They just decide to create more money. Right? Imagine if you had all your dollars, and tomorrow the U.S. government says, okay, you're going to have $1 and you're going to have dollar cash also. You'll have $1 plus. So now you'll have for each dollar you have, it'll split into $2, and you can use both of those. That's what Bitcoin did. They just said to everybody who has a Bitcoin. And who profits off that? The people who run Bitcoin. They've got millions of them. The guys who started Bitcoin are the ones who have all the money, and they're the ones who decide that they're going to split Bitcoin into two parts and double their money. This is ridiculous. It's a gigantic scam. It's like way worse than Madoff, what's going on here. Because you think about the government doing that, and Donald Trump tomorrow can say, okay, we're going to split the dollar, and we're going to have dollars. You'll have your old dollars, but now you're going to have dollar pluses, and the dollar pluses will come out of your dollars, and they'll look exactly the same, and you can use them in the same stores and do the same thing and everything else. And then it's like, and now you're all going to be double. You're all going to have double the money. See, we're great. America's great. We're going to pay off our debt with the dollar pluses. And you would look at that and you would say, oh my God, this is insane. Yet Bitcoin does it, and everybody's like, oh, that's great. Look, more Bitcoin. It's crazy. So anyway, so my point is that while it's fun to make a ton of money, while it's fun to go from 92,000 to 94, just almost 95,000. So to go up 2,000 whatever dollars in one day, in a morning, is fun. And there's only a $50,000 portfolio, too, so, talking about a significant move. To be up 100% for the year is nice, but it can't be sustainable. It doesn't take many years of going up 100%. I mean, what's the number? There you go. So here's our $50,000 times 2, third year, fourth year, fifth year. So in year 6, so what's this year? This is 17. So in 2023, we'll have $1.6 million from that $50,000 investment. Well, that's going to solve everybody's financial problems, right? So where's this money coming from? Somewhere the money has to be coming in, and that was the point I was making back on the 29th, was I was saying, where would this money come from? You can't make gains like this in a vacuum. How could the market be up? I forget the number. 35. Here you go. The entire market cap of the S&P was $6 trillion. Now, all right, today we're at $24 trillion. This is just the S&P is at $24 trillion. And it's like, where does this money come from? There's a certain amount of global growth, and Bitcoin was only 210. Now it's like 250 something, 260. So Bitcoin just went up $40 billion since November 29th. But this money isn't coming in. There's nobody working. There's no labor creating this money. It's all paper gains. Everybody's just marking things up and writing stuff down on paper. And all the people who, and it's only our class, only the top 1% really, or top 10% have all the stocks. Okay? The amount of stocks held by the bottom 90% in their 401ks and IRAs and whatever is negligible. It's 15 or less percent of all the stocks there are. 85% of the stocks is held by the top 10%. This is our money. We're getting richer and richer and richer, and we're buying and selling and trading our Bitcoin. You know, we're selling some stock, we buy some Bitcoin. The Bitcoin goes up, we sell the Bitcoin and buy some stock. It's all funny money. It can't last because there's nothing real backing it up. There is no actual increase in revenues, increase in earnings. There's no more efficiency of labor. None of these things are happening to support this. And that's why it's probably all going to collapse at some point. I don't know when, though. It can go on for quite a while. Bubbles are like that. But this is crazy. You have to realize sometimes that there is such a thing as making too much money. Okay? Like, look. Forget the world, because it seems complicated. There's all kinds of ways you can imagine that things are happening magically somewhere or another. But just imagine in your own, let's say your company is the world. Okay? And there's like 100 employees in your company. And most of them let's say they all make about $50,000 a year. But you are the boss and you make $200,000 a year, and you've got a couple of VPs that make $100,000 a year, let's say. Okay? So if you take more money as a salary or a stock, or however you want to take it, it doesn't matter. The bottom line is there's less for somebody. Like, let's say all the employees own the stock, right? Forget other people. Let's say all the stock is held by the employees in the company and the proportions are similar. So now you want to enrich yourself, so you give yourself stock options. Well, what do your stock options do? They dilute other people. It's not harmless for you to give yourself stock options. And it's not harmless for us, the top 10%, to double our money. We're doubling our money, which means we have an expectation of trading those stocks for cash. But the cash has to come from everyone else. There's only so much cash. Now, if we trade our stock for Bitcoin, that's easier because there's a lot more Bitcoin than there's cash being made all the time. But we're trading our stock for cash. So we are in ultimately, not right this minute we can pretend anything we want about the stock price. So in other words, I can have this company and I can tell all the employees how rich they're getting because the stock price is going up and up and up. And I can say you're all millionaires. Everybody in the company is a millionaire because I said the stock price went up 10 times this year. Even though we're the only ones holding the stock. But because I've been buying shares, I've used company money to buy the shares back, which happens all the time. I use company money to buy the shares back instead of investing in a new plant, and instead of hiring more employees, and instead of trying to market more product. I've given up on all that, and I just use the money that comes in to buy more stock. And boy, has it worked great, because we haven't been selling, and the stock keeps going up and up and up and up as the company keeps buying it. So now we're all rich. But you're not all rich. What you've done is you've debilitated the company because you haven't spent on the future, and you've got a whole bunch of people there's no open market for the stock. And as soon as you try selling the stock, people are going to look at your debilitated company that hasn't been investing in the future, and they're going to say, well, why would I want that? And that's where we are now. We're rich on paper. And everybody just wants to believe it so badly, they're not willing to look under the hood and see what's actually going on. And it's a very dangerous time. And again, it can go on for a very long time, though. In 1998, I was telling people the same thing about all these Internet.com companies, and damn if the thing didn't double again in 1999. 1997 and 1998, the market doubled. In 1999, it doubled again. The whole time, all the way up, it was clearly a bubble. There was no question about it that this thing was completely ridiculous. Didn't matter. And many people got actually rich from it. I knew a lot of people who took their money, they doubled their money in 6 months, and they got out. And those were the smartest guys. They doubled their money, and they said, oh, that's funny, and they got out. The ones who stayed in, who thought they were going to triple and quadruple their money, they got screwed, because 3 months later, they looked around and they had nothing. So, I'm just saying, if you're making money in this market, that's great, God bless you, but just be careful and watch out for what could happen next. Because this is not natural. Getting gains like this in one day is insane. Okay, 85.6% this morning and 89.7% now. That's ridiculous. I mean, they're good stocks. I have faith in them, so on and so forth, but this is just, it doesn't make any sense. Nope. Okay. Do you short the lagging index as soon as the other three are below, or do you wait until the laggard crosses? I imagine you want to say crosses. Oh, he does say that. All right. It depends on how strongly I feel. Oh, look at that, 58. Damn it. Wait a minute. All right, I'll add one more and see. See, 58.07 is a real top. I can stare at it. So I'll add one more and see what happens. Whoop, ran away. There we go. Okay. So now I got two at 57.96, and we'll see what happens. Look at gasoline. Gasoline is going up and up. So 175 is like the short. So index-wise, so now we'll get back onto those. So let's take a look at the other guys. It would be got the Dow, got the thing. So it's going to be NQ and TF. No, wait. Yeah, TF. Okay. So what we'd be watching for is I want to see if everybody's failing our line. And the NASDAQ actually made a move up higher, so they're above their strong bounce line. Oh, no, they're right at the strong bounce line of 65, right? I think it was. So if the NASDAQ is failing here, I want to look at all the strong bounces. So let's say, for example, let's say here on the Dow it's going to be 24.8, and here it's going to be this pink line, which is 26 whatever, and here it's 1550. So let's say those are our lines. So I want to see that everybody's being rejected for sure. And I want to see it turn down. Now, here, I don't mind playing the line on the NASDAQ because it's a nice clean line. I can play 6,500. So easily, my favorite thing about picking a line is to have a good stopping point. So over 6,500 is a good stopping point. So here, I have a very defined risk. If I sell here at 97.75, I'm not going to lose more than about 3 points, which on the NASDAQ is $600. So, or 60 or 600? Maybe 60. Yeah, I think it's 60 actually. It's only $20 a point. So on the NASDAQ, I'm taking a very, very small risk to put up a position there, and it's going down now. So Then if that gets away from me, I then look to see who's lagging. And I would say probably the Russell is lagging because it's the highest, but remember the Russell is the hardest to trade. So the Dow is consolidating, making a little squeezy triangle thing. So here is probably not a bad short. But I shorted the Dow way up here before. I think we're going to break down, but I'm not sure when. But as to when I do it, it's when you got to have at least two things fail your lines. You have to have lines that you definitely set, and you stick to it. Then if two indexes are below, you can short either one of the other two as soon as they start to cross. But you want to keep a very, very tight stop. And the idea is to get out if any of the indexes go back above their line. Don't wait for yours to go above the line, then you're losing money. If one of them goes above the line and beats you, then say, okay, good, I'll take my little tiny profit and get out. Because, the tiny profits make up for the tiny losses. So you want to have those tiny profits. There's no sense in, spitting in their faces. But right now, especially with the Russell going up, Russell's not confirming the move down. The Russell's moving higher. So until the Russell calms down, I've got no desire to short anything. And by the way, the fact that he stopped here at 6,500 doesn't mean anything because, of course, it's going to have trouble getting over a fat line like that. So this doesn't prove that the NASDAQ is weak. It's just hitting a consolidation point, and it may be consolidating for a move up. So it doesn't mean anything. I want to see him having this trouble at 1550. I want to see him having trouble at 2688, whatever that line is, and definitely him at 2480 is a definite stopping point. But I'm not as enthusiastic now as I was this morning because this morning was clearly silly. This is only maybe silly. Now I'm just saying based on the fact that they haven't bounced very strongly, that makes me think they're going to come out weaker at the end. But I don't know for sure, and I don't have any news that's driving that like I did this morning. So I wouldn't jump on it that way. It's not all about technicals. I have to have a reason I'm doing something. Oh, what, the bottle looks like a extra trick? Yeah, it doesn't look that thing. Litecoin, okay. The Litecoin guy cashed out. Yeah, well, good for him. I think it's great. I think it's great that he told people, too. I like the Dogecoin guy, or the Doggy Coin, or whatever the hell he calls himself. Because that guy, they interviewed him on The Daily Show. It was a good interview, too. And he's like, I made it as a joke. He's in there. He's like, it was a freaking joke. It wasn't meant to be serious. He took Bitcoin, he copied the code, gave it another name, and started a new coin, and it became a thing. Now it's like one of the higher rated coins. He's just like, this is the stupidest thing ever. But what the hell? If somebody wants to pay me a ton of money for something I made in my basement, why not? I just watched yesterday. I'm behind on my stuff. I watched The Big Bang Theory on my TiVo, and I guess it's from a few weeks ago. It was funny though, because they apparently the show is about that they had back when Bitcoin first started. They thought it would be fun to mine them, and they mined them, and they left them in some laptop. But then it's like 10 years ago, so they had to trace down where the laptop is, and it turned out it was to be lost to the ages. But it is funny when you think about that, and that's why, by the way, they talk about how out of 21 million Bitcoins, probably about 4 million or more are just lost. And the Big Bang Theory kind of shows you how that happens, because a lot of people in the early days, when you could mine Bitcoins like you could mine 10, 20 a day, people had hundreds and thousands of Bitcoins that they didn't take seriously. They were worth a hundredth or a thousandth of a cent, and they would mine them and put them somewhere. And if they left it in a laptop and they junked the laptop at some point before Bitcoin caught on, that's it. They're gone. That means they've been mined and destroyed. And there always a lot of that in Bitcoin. So some of these coins will never be recovered. They're just gone. And it was good on the show, because it's like they actually went through the whole process of like what happened, and you think about how many people this did happen to, where it was just this stupid thing. It's like Have you ever played like a video game on like your iPhone or your iPad or something like that, and like you do something, and you spend time building some character, like the ones where like you go to war and you're building a fort and whatever, and then after like it takes you 2 hours to build a fort, and then you go to war and you go, oh, this is boring. I'm not going to do this 10 times. You scrap it, right? That's Bitcoin mining. There's no difference. That's all it is. You're doing crap with your computer to get coins, and it's no different than if I mine a bunch of gold to build a castle to fend off invaders with my Warcraft or whatever game it is. So, like my daughter, my oldest daughter, Maddie, she's big on the game. She likes to Warcraft and things all the time, and there's a whole economy in that thing. There's a serious economy built up inside that game. People trade, they pay real money for the stuff. Maddie makes money. She makes money painting armor, which she's artistic, she's an artist, and she actually she can customize colors and things like that to people. And apparently they pay her for this, which is amazing. Not much, like a few bucks, but she'll if you give her your armor, and apparently it's important that you can trust her with your armor, because once you give it to her, she can keep it. But if you give her your armor, she can then make it look nicer, and that's apparently a valuable skill. And if that was her actual job, I think I would cry, but that's where it is. But so anything can be theoretically worth something, and so like I'm saying, but so games like that, it's not much different. I mean, those people will spend hours doing stuff to win quest items and things like that, and it's no different than a Bitcoin. You spend hours of computer time to do something. Now, most of these Bitcoin stuff, they try to automate it, so that you're not actually sitting there like an idiot waiting for the coin to come along. But it takes your time and effort and your actual money and labor to buy the computers to do the stuff. But back in the old days, it was literally as hard as an iPad game. It was like somebody would do it, you put in your code, follow the instructions, and coins would start coming. Because they were cheap. And a lot of cryptocurrencies now, you can still do that. Where it'll just start, if you want to get coins, there's a lot of people around buying these coins. If you understand the coding of it, you can actually just start mining coins for all these different low-cost coins. You can just start mining thousands of them at a time, because the coding is easy on the smaller coins when they're young. It becomes harder over time, but when they start out, these coins just sort of flow out of the mine. It's like it's like the easy gold at the top of the mine. So it's all bullshit. It's just such nonsense. When you have 1,000 different cryptocurrencies popping up and people making more every day. Oh, that was the other thing. In the Daily Show, that was the best part of the Daily Show, there's apparently an app that lets you set up a cryptocurrency. So the guy went on the app, the reporter, he went on the app, he set up his own cryptocurrency in I don't know how long it actually took him, but it looked like very quickly. And all of a sudden he's got his own Chang coins, I think his name was. And so he starts trying to get people to accept Chang coins. And he's saying, it's the next Bitcoin, take a Chang coin. And, it just shows you how ridiculous it is. I mean, he just sits down with an app, makes these coins, and now he's like, oh, I have a coin too. And frankly, I said it a couple of years ago, I wish we'd done it. I said, why don't we make some Phil coins? And when Bitcoin first came out, I said, let's make Phil coins. I said, people buy those. And probably they would have, because we would have been one of the earlier adopters at the time. I was worried that it was illegal. I was worried that the government will come and kick your door in and take you off to jail. And I still think that might happen. So I didn't want to, it just seems to me it's like such a scam. It's like somebody should get arrested at some point. But so far, no. JC says, please provide some perspective on UNG. NG seems super cheap in very cold weather. Yeah, I wouldn't say very cold weather. You better be careful about statements like that. Unless you live unless you live in a very special part of the North Pole or South Pole. But here you go. Let's talk about that. AccuWeather. You're going to be an investor. You need to know how to do your research. So AccuWeather. And we go to radar map, forecast map, and trends. There we go. So, is winter coming? Well, it's hot now, and we only care about the places where people would either, in other words, it's always cold here. But blue is colder than normal, red is hotter than normal. So, you're looking for the places where the money is. So the people live here. Keep that in mind. This is where everybody lives. Nobody lives here. So it doesn't matter if they're cold. Plus, also the kind of people, the housing and stuff that they have here generally is made to deal with the cold more so than we're more flexible. So here, a good amount of cold, so 6 to 10 days. So into Christmas, actually. Not Vegas, though. I get some warm weather in Vegas. I'll be happy. Oh, yeah, look at that. While everybody here is cold, I'm going to be warm. So let's see. So we have cold snap here. That's going to last 11 to 15 days, so for 2 weeks. But then look what happens. It evaporates really quickly. And all the way up to 90 days. So don't forget, these are averages. So the 2-week average is colder than normal. But then after 30 days, including these 2 weeks, already we're back to a little colder than normal, only in a few states. That's one of those polar vortex things probably when it comes down. So we're only a little colder than normal. And not only are we colder, but then it balances out by all these guys getting warmer. But then 90 days in, only this little part of the country is colder. Everybody else is having a nice time. So no, we're not going to have, this is it. This is the end of the winter. So we're not having a particularly cold winter. Only a little area over here is going to be colder than normal over a 90-day average. Whereas this area here and here is warmer. Not that these guys heat. These guys are normal. Now, normal means there will be some consumption. So I don't think it's not terrible for gas, but it's also not great. There's nothing great about this forecast for natural gas. If you're not going to make money in the next 2 weeks, you're probably not going to make money. So where does that leave us, though? It leaves us with an actual viable spot for gas, and I've been waiting for it to come down. I think it came down nicely today. Yeah, we're all the way down to 261, and in fact, I called that this morning, too. So you guys don't realize I do all this work. NG. Nope, not there. There you go. Waiting on oil, now 57.50. RB 170. Look, RB was 170 at the time. NGV8, that's the one I like to play. That's like way at the end. That's an October contract, I think. Is 265. Viable again, but it might test 260 on NG. So down about 4 cents more. So I was looking for 262-ish, basically, and want to see 260 on NG. And where are we now? All of a sudden, whoop. So here's my NGV8. Oh, those indexes are still looking weak. Here's NGV8. No, still not really coming down much. That's partly a function of the time. It's just not going to move as much as you want it to. It's a shame, though. And here's NG proper. And NG proper came down to 262. So I'm not getting as much of a dip as I wanted, and it looks like a double bottom here. I don't mind buying this, though. So let's add one here. Let's add two. So we'll add two long here. And because it's a nice amount of money. I mean, I forget what it is. I think it's $10 a point. I'm sorry, not 10. I mean, a penny is like $100 in natural gas. So if we can get back from here 265 to 270, that's going to be $1,000 gain. So I'm happy with that. So I'm good with a contract, with two contracts, and we'll see what happens. And also, though, if it drops down all the way to 260, I'll be down like $500. And I'll be very happy to add and have a 262.5 average. So either way, I'm good. So, because again, this is the October contract, and over the course of the year, my main bet on natural gas is that all the exports of natural gas is going to cause it to go higher. But over the short term right now, we have 2 weeks of colder weather coming in. So it's a good 2-week bet, and it's a good And it's a good longer-term bet if that doesn't pan out. So I like that. Indexes, weakening. Let's get back to work on those. NQ and TF. All right, so here's a good example. Who's lagging? Well, the Russell is lagging. Where did the Russell top out? 59, 48.50, and where is it now? 47.50. This is basically my lagger, though. Oh, see, everybody's dropping, so I'm going to do it. Let's go too short there and see what happens. Because it looks like everybody's getting weaker, so he is my laggard. He hasn't gotten weaker yet. Although the Russell is crazy and goes all over the place, usually if everybody turns down, it'll snap to at some point. So we'll see what happens. And now I'm going to watch them and make sure nobody turns back up. And hopefully we'll get a nice little dip here. All right, so meanwhile, how's oil doing? Any luck? Ooh, no, going the wrong way. Not happy about that. So while we're waiting, this is where I get into trouble and I don't pay attention. So while we're waiting, let's take a look at the petroleum status report. Now remember last week, we noticed that they were exporting all of our gasoline. And this week, they are still doing it. See? We're exporting 3.2 million barrels of refined product a day. So in other words, this is what's insane. We're importing 6 million barrels a day. And of those 6 million barrels, we're turning around and exporting half. So this is not what you think is U.S. demand for oil. The 17 million barrel demand for oil is really 14 million barrels. The United States doesn't need 17 million barrels. We need 17 million barrels because we're sending 3 million out of the country. That's not U.S. demand. And that did not used to be true. We used to export at most about 1 million barrels. So it's a massive change, and it just shows like how much actual U.S. consumption has cut down. So none of that's changed. So basically, we're at the same product supply. They've actually supplied more product. We had crude inventories went down 6.1. Is that this one? December 15th. Yeah, that's this one. Okay. Oil down 6.5 million barrels. But we're shipping 21 million barrels a week out of the country. See, per day. We're shipping 21 million barrels per week, or 22 million barrels per week, out of the country. And our inventories went down 6.5 million barrels. If we weren't shipping 22 million barrels out of the country, the bill would be insane. Even though we're doing this, where is it? Petroleum 6.5, blah, blah, blah. Gasoline. Even though we're doing this, gasoline inventories increased by 1.2 million barrels. We are totally not using gasoline in this country. Even shipping 3 million barrels, even shipping out 22 million barrels, we still end up with an extra 1.2 million barrels laying around. And distillates increased by 0.8 million barrels. So a 2 million barrel build, 2 million barrel build in the petroleum products after we ship 22 million barrels out. That is not a demand picture. And then we look over gasoline, how much was supplied. It's the same as last year. Even though we supplied the same as last year, we are shipping out 400,000 times 7, 2.8 million. So we're supplying the same as last year within a tiny amount, but we're shipping out, what do we say, 2.8 million. We're shipping out 2.8 million barrels a week. So we're shipping out 2.8 million barrels more on the same amount supplied, and we have a 2 million barrel build of product. That's crazy. And look, and they're producing less distillates too. And we're shipping them out with the other one, with the gasoline. That is crazy, crazy, crazy. So the bottom line is that that's no reason for gasoline to be this high. Right? It's tricky to short gasoline into the weekend, though, but it seems a bit overdone. So where are we? What did I short? Short a TF. We short the Dow or just TF? No. Okay, so we just shorted the Russell. Okay, so focus on the Russell. And what do we talk about? Gasoline? So RB, I got to short gasoline. This is too much fun. It's the possibility of making a fortune on this. Wow, look at that number. Ah, stop it. Oh, look how fast it's dropping. Bastard. All right. So now I got 2 short at 173.35. It should have taken that long. I knew it was going to come down. But this is just stupid. There's no logic to where that is. All right, so we'll see what happens. And that's how I like to make a bet. I like to look and see if the move makes sense, and if it doesn't make sense, then I want to make a bet. Phil, your thoughts on BBBY, please, and where you think it might hit upside, and where you think it might hit upside first target. Before the estimate. Okay, we talked about this, didn't we? So maybe it wasn't you. I like Bed Bath & Beyond, but, you know, look, I don't like them enough to bet on earnings. I want to see the earnings and figure out where they go. They are struggling. They are having, you know, a lot of price problems as far as it goes. You know, they're trying to change their mix away from things that compete with Amazon. Because that's where they're getting hurt, especially, you know, the margins. Not, you know, this is the thing with Amazon. Amazon doesn't make money selling things. They don't care if the person selling it, they get a cut no matter what. So Amazon doesn't care what price you sell something for. So the seller of goods could have defective goods, or they could have bought them in a bankruptcy, or it could have fell off a truck or something. It doesn't matter. Amazon doesn't give a crap. I mean, I'm not saying they allow criminal sales, but, you know, to the best of their ability, they try to have good sellers. But the bottom line is, you know, if the mafia steals a truck full of coats and they want to sell them, they sell them on Amazon. You know, they just, you know, you have you distribute them through legitimate stores that you control, or that you're able to push through and get people to do you a favor. And you take coats, they sell them on Amazon, and then boom, and people, who's going to check? It's so impossible to run all this stuff around. So the stores who are doing legitimate business have trouble competing on price. And especially public companies like Bed Bath & Beyond, they can't mess around, and therefore they've got to just stay away from the kind of things that are getting killed on Amazon. So they're constantly having to change their mix to get in there. I like Bed Bath & Beyond, though, because a lot of the stuff they carry, like linens and pillows and bedding and things like that, it's stuff you kind of want to try out. And it's not, you know, you want to feel sheets and beddings and towels and things before you buy them. You know, I do anyway. More so than, you know, than a pot or a scrubber or something like that. So some of the soft goods, which if you notice in Bed Bath & Beyond, they kind of expand those sections, are more important to them than the other. Even when you go to Brookstone in the mall, They got a lot of pillows now and blankets, and that's because, again, it's the kind of stuff where, it's hard to order things like that on Amazon. You never know if it's going to be, as good as you think it is, or what the quality is, and if you have to return it, it's a big hassle, and so on and so forth. So anyway, Bed Bath & Beyond is changing their mix. They've been in sales decline, though. They're having a rough time. They're reorganizing their stores, and I like them long term. I think this is a great price. I don't see any particular reason they're going to move right now. They're already up from 19 to 25, 24, which is up $5. So they're up like 25% from where they were in the last earnings. So people are expecting another good report like they had last time. Or last report wasn't that good. This was their last report. They sold off. They drifted down. Now people are expecting that it won't be as bad. If it isn't bad, they'll still back off again. And I'm hoping they do because I want to buy them at a lower price. We had them, we just got out of them. This is us selling. In fact, we had a lot of Best Buy. We sold them here when we cashed out our portfolios. And I'm glad we did. It was a good price. You get a 25% move from the bottom, you take the money. So target-wise, I think they can get back to here around 30. But I don't think they're going to do it tonight on earnings. I think that there's a 50-50. I think they can go either way a couple of bucks. And I hope they go down because I'd like to buy them lower. I'd like to see people lose confidence in them again. Show you expectations wide, BBB wide. See, the numbers are erratic, of course. But they did $3 billion last quarter. They did $3 billion. Last year they did $3 billion, and last quarter they did $3 billion. So they're probably okay as far as that goes. But here's where their problem is. See, what's happening is they did $3 billion last year, made made $126 million. Here they made a lot less. They only made 94 on the same sales. Can't do that. That's where their whole problem is in the store. You can't do that. You've got to have profit. If you're going to have the one good quarter. Now, look at this though. Look at how their incremental profits are though. When they hit when they have their Christmas quarter and they do $3.5 billion, not that much more. It's $600 million more than here, but they make double. So it's a much more profitable next $600 million. Now, it's a shame because if they could grow their sales, it shows that their operation at this exact spot where they are now, the efficiency scales up tremendously as they move forward to the next level, but they can't do it. They're having so much trouble punching out of where they are and getting to the next level. They need to add $1 billion in sales across all 4 quarters. They need to add another $1 billion worth of sales, and they can drop another $250,000 to the bottom line, which will make them an exceptionally good company to buy. So I like them. I really, really like them down here. I think they're a great value. I just don't know the earnings are going to be any particular great thing. Anyway, if they do have good earnings, I'm still happy to buy them because they're still very cheap. They're only priced at $3.4 billion, and that's $3.4 billion with $600 million in profit. It seems not likely to go much lower. So, if they're trading, even if they go up from here, I'm still going to be happy to own them. And plus, not only that, though, we can pull out some plays to do it. So, if you see, by the way, this is not looking good. We're up a little bit, but see how he's turning green over here. So, I need to see. Let's get back to watching the Dow. The RV I'll keep until tomorrow, so I'm not worried about that. Okay, I need to see the S&P break below their line, and I need to see the Dow break below this line. Otherwise, I want to have an itchy trigger finger here to get out. So if they're going to bounce, this trade's not worth keeping. So I made a quick $50, and I should probably take it. Back here, I'm going to take one. There. So now I got a little bit locked in, so I can afford to watch it a little bit longer. That's why I like to go 2. I like if I make some quick money, it then raises my my stop that I have more comfort to watch the last one. So what am I looking for? I'm looking for these lines to start breaking now. And if they don't, and if they break, I'm going to feel much more comfortable with my trade. But if they don't break, if they turn out to be bouncy, I'm going to want to get out. And so boring to do. Well, live thing is like a boring thing to watch, right? Here we go. Yeah, I'm not that excited by it, so I'm going to take this money if I can get it. Come on. Oh, don't be mean. Be mean. You know, I don't know why these thingies don't work here. I like it when I can see these guys, which I can't see here. I don't know why. On the NASDAQ and the oh, shit. Look what happened. Nah, see, I'm not liking the way this is going, so I'm going to get out. For 35 bucks. Oh, well. See, but like I said, bouncing off these things, and we get so many run-ups into the close, I don't really trust it not to do that. So we're done with that. That was fun, but it didn't work out. So now we go back to RB. Oh, nice. So we're getting paid on RB. And CL. Not getting paid on CL, but RB is making it up so far. And what's the other one we're watching? Is NG. I thought I bought NG. Oh, NGV. So I got two of my NGs, I'm good with that. I got two short here, I'm good with that. And I got two short there, I'm good with that. And now I'm watching this 173 line. I want to see it come back below that. And then when I say come below, I want to see this guy. I want to see the ask go below the 173. Then I'll feel better about it. Until it does, though, that could be a bouncy line, in which case I got $300 sitting on it. Now we're below. Now we're above. So I either want to see oil breaking down more to get comfortable, or I want to see these guys coming below the 173, which it is. So I'm feeling a little bit better about that now. See, how's that? Make a nice $300. Worth coming to these seminars, right? If I can do that for you. See, and then you got to decide like what's a meaningful amount to you, because I mean that's the problem. Unfortunately for me, it's like $300 is not that exciting. But see, because it's bouncing back over 173, it's not coming back below and staying. I'm going to take one off. Good luck getting a fill. Whoa, what the hell? That is crazy. Okay, let's try to take one off here. Oh, that was a fast fill. All right. So now my break even is way up here at 34. But even so, I'm going to set a stop. If it goes back over 73, I'm out with a nice profit. And if it keeps going down, then God bless it, I can even set this up here. I'll set up a buy way up there, and it'll automatically fill me if it comes back over, so I don't have to watch it. Meanwhile, this one I'm going to hold out, hopefully it comes lower on oil. But oil is where they got the draw. At least they have a case to make. Gasoline has no case to make for why it should be this high. And what I'll do is I'll set a stop. I don't like to set stops and walk away out generally. I only eyeball it, because if you set a stop, they'll usually try to hit it, to steal you, to grab your money, to spike it up and down. But what I'll do is now, if it goes down 20 cents, I'll move the stop down 10 cents. If it goes down another 20 cents, I'll move the stop down another 10 cents. So just keep following it lower, so that you get a nice amount on the stock. So now it's coming up near $400 already. So this is going well. What were we going to do? I lost track now. What the hell was I talking about before we got there? Bed Bath & Beyond. Oh, yes, Bed Bath & Beyond. So for Bed Bath & Beyond, if I was dying to play earnings, which I'm not, and I've got no interest, I like them a lot. I definitely will add them to the portfolio in January, but I don't feel compelled to do anything else other than just watch them. But since I like them as a long-term story, if you want to get in now at 24, I would take something like this, let's see, 25, aggressive. All right, for 650, I would go for these 2250 calls, the 2020 2250 calls, and I would sell for $32.50 seems aggressive. Still, for 350, see, that's 260 and that's 420. I would sell the 3250 calls for 350. So your spread will be about $3. And you got the 2250, 3250. So you have a $10 spread for $3. So, and your base is 2250 and we're at 24. So basically, if Bed Bath & Beyond has great earnings, you got a $3 spread that's going to turn into, oh, what happened? Oh, my RB stopped out, see? So if the Bed Bath & Beyond goes up, you're in the money, and you're on the way to make $7 from $3 over time, which is a nice return. That's, 233%. So you have a 233% upside if it keeps going up from here. Nothing to complain about, right? If it goes down, that's where it's more fun, though. So if it goes down, then you can sell like the 1750 puts for maybe $4 or $5. And that completely pays for the spread and leaves you with a credit. Right? So in other words, and then you can use some of that money to actually roll your 2250s down to like the 20s also. So in other words, if it goes up, you just make your money on the spread. If it goes down, you make your money. You then can, if you still feel good about them, even though they're going down, which I would probably, you can then sell the puts at a better price. But there's no sense in selling puts now at 24 when it's possible they can drop 10%. Why sell the puts when they're not on sale, when they're not giving you a good price? Sell the puts if they give you a good price. If they don't give you a good price, there's nothing wrong with paying $3 for a $10 spread. That's like $1.50 in the money. So you're only risking $1.50 in premium on the upside. You can always offset that with a put sale anytime. You can sell the $15 put for $1.50 to offset all. Then you offset all the premium. So that's how you play something like that with earnings, if you want to be sensibly conservative about it. Now, what the hell happened to my thing? See, I hate that. Wow, look how fast it popped up. That's why you take the money off the table. So we made $300, even though it's higher now than where it was when we shorted it. Of course, I gave up that $300 on this one, though, unfortunately. So we'll see. I'll stick with the oil short, though. I'm not worried about that. In fact, I'll reshort gasoline if they're going to keep going up. So where do we top out at 79? Let's see what happens. But you see, though, I think that's what I was trying to say. I was saying you've got to learn. You've got to be happy. It's hard for me to take $300 off the table because it's not a big amount of money to me. It doesn't, but it's still a dinner. It's still like something. It's a free dinner, so I should take the money. You can't just keep going for big amounts because these small amounts add up. Because I already made 2,000 this morning on the Dow and the S&P, and then we made another 35 here, another 120 here. That's the loss that we had all day for 300, and this one bounces out. So another $100 and something net coming in now. So why not? You make a few $100 here, a few $100 there. It starts adding up to bigger numbers after a while. But not if you don't take the profit. Because if you don't take the profit, these things go away as fast as you get them. Easy come, easy go. That's from Bohemian Rhapsody said that. Keep that in mind. Wise words from Queen. Also, your thoughts on CHK and if you like long-term puts. I like CHK because of the natural gas angle. They're not the company they used to be, but I think these guys will get it together. And on CHK, sure, I like it because look at what you get. You can sell the they're at 375, but you can sell the 350 puts for $1. So that nets you in for 250. So what's not to like? And watch, if you sell them, it's like a magic trick. Sells, singles, and let's say we sell 20. So we sell 20 of these for $1. And that's going to cost me $700 in margin to collect $2,000. All right, so I collect $2,000 for $700 in margin. That's nice. I'm going to triple my money on the margin. There's nothing, doesn't cost me anything. I'm not using any of my cash. I'm putting aside $700 in margin to make $2,000. So why wouldn't I do that? What's my worst case? My worst case is I'm assigned $7,000 worth of CHK, and I keep the $2,000, so I spend $5,000, which is $250 a share, for 2,000 shares. So my worst case is owning this thing for $250. And now what if I did own it for $250? Obviously, the numbers would be different. So let's say $250 instead of $350. So let's say I set it for $250. Look at what I can sell the $350 calls for. And again, that would be if it's at $250, that would be the $250 calls. But even so, I get these things assigned to me at $250. I turn around and I immediately sell the calls for $1, or these are $1.30. But let's say it's only $1. Then I've dropped my basis to $150, and I get called away at $250 with a 66% profit. So it's hard to have a worst case unless they go bankrupt. This thing is a freaking fantastic stock to trade. So what am I saying? I'm saying I'm going to start sensibly by selling the 350 puts. If I get assigned the 350 puts, my net is 250. I then turn around and sell calls for $1, and I drop my basis to 150. I don't see the downside here. If you don't want CHK, if I don't want the freaking stock for 150, what the hell are you even looking at it for? At 375. I will certainly pay 150 for that stock, and since my worst case scenario is basically 150, I will buy a lot of it. So that's another one that will definitely go in the portfolio when we start our new portfolio. That's good for the OOP, in fact. There's no reason not to take that. That's really nice. David says IWM. Yes, IWM. I don't know. Are we just shouting out indexes? I bought TIA 250 call. Should I exit? I don't know. It was rolling luck on Santa Rally. I mean, I don't believe in it. I don't think we're going to have a Santa Rally, and I don't believe in buying naked call. So that's a terrible idea on many things. So for me, no, I would not do that. 250 calls. Wow. You're the sucker that we sell options to. You're exactly the kind of guy we wait for you to come. You're the guy paying the premium. 250 calls for DIA. I don't know what month they are, but if you did the January 250 calls, you pay $1.25. So you're going to give me $1.25, and you don't even get even until we're at 251. So that's up $4. And $4 is is that 5%? All right. Yeah, 5%. No, I can't do it. 2%. Yeah, basically. Okay, so you bet that in 2 weeks, in 2 weeks. You're betting that in 2 weeks basically that we're going to be 2% higher, and I'm betting it, and I'm like, I'll take that bet. Why not? Not only that, though, I could make more money and sell to the guy who thinks we're going to be 2% lower. You can't both be right. That means I'm collecting 4% worth of money. So the market, the Dow has to go up or down 4% for me to do it. I wouldn't do it because I think the Dow's going to be lower. But anyway, it's not a bet I would make, put it that way. How much of a correction do you think we will get in January, please? I think 10%. I think if we get 20%, I'll be super excited to buy 20%. But I think we're only going to get 2%. 2%. Sorry, we're only going to get about 10%. I just think there's still too many buyers in this market that they're not going to bail out. And again, assuming we're correcting for the sake of just people cashing in on their profits. Look, we're not up that much. We're up from for the year. We're up from 2250 to 2680 is like 400 points. So that's about 20% for the year. Since the election, we're up 30%. But for the year, for the proper year, we're up 20-something%. So if your taxes are now 35%, so of the 20%, you're giving back 7%. That means 13%, right? So if your taxes are now, you get 13% back if you sell now. If your taxes are 21%, though, that's 4% back, and you get 16%. So there's a 3% difference in your take-home profit. After-tax profits are up 3% if you wait until January to sell. So for sure, people are waiting. That's a lot of money. So unless you think the market's going to go down 3%, which would be, I don't know, about 75 points back to 2,600. So unless you think the S&P is going to sail 2,600, you're better off staying in the market. And that's been going on, basically, this is November, it's been going on basically since we hit 2,600. That's been everyone's attitude. Nobody's selling because they're like, well, if over here, there's no point. As long as we hold 2,600, why would you sell? It's all free money at this point. So they're going to hold and hold and hold. Then what's going to happen is you got to figure that was the proper top, and we're going to come down to there. There's a 3% drop, and probably going to hit the 50-day moving average of 2,500. That's another 4% down. That's 7%, and then probably a bit of an overshoot, so we'll come down around here. Now, 2,400, as you can see over here, and even 2,450, but in this area is very good support. We had a big consolidation almost all year long on this 2,400 line, 2,450 in that range. So that should be support down here, and that's 10% correction. That's where I think we're going to be. I think we're going to wind up around 10% corrected from where we are now. 20% would be huge. 20% would be 500 points, so down 2,100. So what's the likelihood that the entire rally is going to be erased just because people are selling? Not that I don't see it. Okay, so I think a 10% correction is plenty. And we're certainly going to be dipping our toes in the water if people are coming down on 10% correction. There'll be a lot of stocks we're buying. Now, maybe we'll end up being wrong, but that's where we'd start buying. 20%, I would get very heavy into buying. But again, I'm saying assuming that we're just selling off because of the normal stuff. If we're selling off because North Korea nuked somebody, that's a different story. If we're selling off because Europe collapses, different story. If we're selling off because China collapses, different story. So it depends on why they're selling off. But if we're just selling off because people are finally selling, 10% is the most I see. How much correction is it? I bought the December 29, 50 cents. You bought it for 50 cents. So you already made money. You already made it double. Why on earth are you talking about it? Take half off at least, man. At least take half off so you have a free call. Then you can play. All right. Let's see. All right, got to wrap this up soon. And this is it. I'm not doing a webinar next week. It's Christmas. Well, not because it's Christmas, because I'll be in Vegas. So screw you guys. No, it's like it's too much. I get up. In Vegas, I have to start my day at like 3 in the morning. Because the market opens at 6, basically 6:30 the market opens. So I'm usually up by like 3 getting started. Not that I'm up much later here, but I have to actually, like, I can't, even if I feel like it, I have to get out of bed. So it's a long day for me, and it's tough to add the webinar. And plus, I'm in a hotel with a laptop and so on and so forth. So bottom line is we're not going to do it next week, but we'll do it after that. So next week, holiday, Merry Christmas, Happy Holidays to everybody. And I'll see you again back on whatever the week after is, around the 10th. All right, so the only thing, what are we carrying in? So we got out of this one. Oh, I want to get back in that, though. That was fun. So we have our long natural gas, which is now paying up nicely. We're out of the Dow. We're out of everything else. We've got we have the short oil, which I have faith in. I think oil's going to sell off. I don't see anything good about the report that we have here. And gasoline, too, though. I got to go back into gasoline now. Look at that. Definitely got to hit that again. Just waiting for it to top out, but I think this could be it. So we get 1. So what's that number? 173.6. And I'm figuring 174 should be the top. That's my stop out, so I'll take a small loss and stop out there. But I also will double down right before we hit that if we come back up there, because I'd like to have 2, like I had before. But definitely my stop is over 174. I'm going to stop out of this. Oil, I don't really have a stop. If we get to 58.50, I'll probably double down, more likely than stop out. And gas, generally with natural gas, I'm really going to be looking to make about $500 a contract. I'll be looking to make like $1,000 here before I get out, which will probably be about $270. So that would be my goal there. But again, it gets a little scary to short gas into a weekend, especially a holiday weekend. But I don't see why there's going to be any major consumption or anything that's coming up. I think it's and especially based on today's report, I don't see where there's any evidence that we're having a lot of consumption. Not in the United States. Outside the United States, maybe. All right, David, I don't know what you're talking about then. I thought we were talking about the 250 call, which I thought we decided was $1 something. I bought 29 December. Oh, December. Oh, I was looking at January. Is that why? Well, anyway, so that's why you shouldn't buy those. December. Really? Oh, yeah, and you buy the weeklies? Those are the worst things to buy. Oh, good God. Have you been coming here long? Because you sure haven't been listening. No, I think if you bought them, wait, you say 29 now. I don't know. Look, it's a terrible position. I don't care when you bought them or what you thought was going to happen, but paying that kind of premium is insane. That's how you're basically, it's against everything that we try to teach people. This is the biggest waste of money. All these stupid weekly and quarterly and whatever options are a complete waste. Because first of all, they're not very liquid compared to the other one. So you're getting killed on the spread, on the bid-ask spread. See how wide this is? 43 to 53, 10 cents, 80 to 88, 8 cents, 20 to 31, 10 cents. You can't pay that kind of spread. You're getting killed. If you do Januaries, which are more popularly traded, well, even these have a 10-cent spread. So I don't recommend these either. You have to realize, here's one that is being traded actively, and it's got a 7-cent spread. But even that's a lot. Because it means that basically when you buy and sell, you're losing, it's got a built-in loss of 7 cents. And you're playing a 50-cent option that's costing you 10 cents to buy it and 10 cents to sell it. So you're basically taking a 40% haircut just on the bid and the ask. Where's the sense in playing something like that? I'll sell those to you every time. You're just giving me 40% to start. And I don't have to pay you unless the entire market goes up 2%. It's crazy. So no, there's a terrible, terrible way to play. Okay? Index futures week action. All right, one last thing we'll look at because I got to get going. soon as I look away from something, it does the other thing. Oh, here. Oh, so these are where we had the shorts, but we gave up. All right. So wait, I got my. Did I get my 2 of these? No, I didn't. I just want to fill this out just so I have them. Let's see, it's going up though. Right there. Oh, that was way too easy. I don't like that. I don't consider it a good sign when it's so easy to fill. It makes me think it's going higher. But anyway, all right. So now we got 2 of each. YM. ES. Oh, yeah, look at that. NQ and TS. So how are we doing? I like I said though. I mean, I said I expected it to be weak into the close because we weren't getting the bounces, and ultimately they fell. We just lost our patience. But again, if these keep going down, the Russell is clearly still the lagging index, so that's the one I would play short. But you're in the air here. Each of these is way in between their zones, so you're not getting a very clear signal from anybody that anything's happening. I mean, yes, they are drifting lower, which is what I thought was happening. So now we'll just have to see what happens in the close. But it's not obvious. And if it's not obvious, it's not that interesting to play. But remember what I said before? The best place to play is when you have that hard line, 6,500. You know that's a good shorting line. And this purple line here was a good shorting line. That's what these are useful for, right? It shows you it went right to that exact spot and it started falling off. So that's a great sell side indicator there. I made the 420 earlier today, but that's how you make the money. See up here? That's how we make the money. It comes up to resistance. You can see the resistance. Then it falls back down. Comes up to here, bounces off resistance. So easy spot to say, let's get out. I took the money here. I got out early at 9:30, but at 10:30, it was obvious that you should be getting out. Look at the NASDAQ. The NASDAQ hit its line. So, I mean, you can even play them the other way. If you're agnostic about which way it goes, you can play these lines both ways. They're just the most likely points that you're going to get a turn. If you do see a turn forming up, you can jump on it and use the lines as a stop. These are the pivot points. That's why they're called pivot points. That's where it pivots. It's not complicated. That's why they name them that. But anyway, all right, I'm done with the indexes. But I do agree that if I was going to play, I would play TS short some more because I still like them. But I'd want to see like a new low. Well, let's make it a new low. That's interesting. I want to see him break down. If he breaks down here, this is the NASDAQ. If the NASDAQ can give me a break below this little thing here, let's magnify. Oh no, that doesn't look good at all. Oh, wait, wrong one. What? There you go. Okay. So if the NASDAQ can get back below here, yeah, even this is a good drop. This is 88 and this is 80. That's a pretty far drop. So if we can just get below these little red sticks here, well, let's magnify that. So right here, it's looking good. I'm going to take it. It's looking likely that we're going to fail. So 1, yes, 2. Okay. Ow, you bastard. As soon as I buy it. See down, he's hitting his number here. He's coming down. The NASDAQ looks to me like it's going to fail over here and make it move down. And if it does that, I expect the Russell to follow. So let's see what happens there. What I would love to see is the Dow failing this line. That'd be huge. That would be a fantastic indicator of going lower. And what line is that? That's like 24.7. So I don't want to see any greens forming here. And by the way, you got to remember when you're out of proportion. So get back to the normal view. You want everyone's view to be the same. I don't want to see any green forming up here. I want to see him fail that, and I want to see him making the bottom of his. I want to see him breaking this bottom here. And if we do that, he's going to have a hard time going through the pink line. So somebody else has got to lead the way. All right, but I think I already did too. Too quick on my trigger finger. I was going to say I was going to add one, but I'm not going to add one now. So far, not looking that great. See, I should have stayed out of it. I lost $35. But no, I do think we're going to sell off a bit more. So I think it's probably a good play into the close. But I don't know if it's going to happen right now or anything like that. But I kept my faith in the S&P, and I made some money, and this guy was a good money maker. So I'll risk a little bit of money on this and hang on to it, I think, unless I see clear indications of a down thing. So he is now. It doesn't mean you're wrong if he bounces off a pivot line, right? But you want to see how strong that bounce is. As long as that bounce stays like pretty lame, then it's more likely he's consolidating for a move lower. And also as long as I'm getting a little bit of downward action here. Now these guys have no support. So if they start turning up where there's no support, why should he go any lower when he's got support? Same goes for the Russell. Why would it go lower through its support when these guys are turning up with no support? So that's what we want to keep an eye on. And unfortunately, we do get a lot of rallies into the close, so we'll see, and hopefully we won't have to take a walk on that. I mean, right now it's down $5. No, but see, that's not good, because now he's moving higher, and he's moving higher, and he hasn't moved higher yet. If he starts moving higher, really got to say, okay, this isn't working. So it's a roll up to the S&P now, and the S&P is the most important index. So really, it's like the deciding factor. And now the S&P is moving higher, so I should get out of this thing. One, two, three. Now I'm watching to see what the next tick is like. Nope, S&P tick down. Look at that. Give me a little bit of hope. Okay, my finger on the trigger here, ready to go. Nice. And now notice I'm moving down to match it. I'm following this thing down because I want to keep myself reminded that I want to get out of this thing. And if it starts moving up on me, I want to know right away. S&P ticked down again, good sign. Now the NASDAQ ticked down. He's still struggling over here to get below. Okay, this is getting a little encouraging now, though. So see, I want to just always be making progress. If I'm not making progress, I should probably consider giving up, right? And I'm talking about the day trade. This is like real basic day trading. And I don't have the conviction. I don't have a reason that I'm doing this other than I think these things look weak. But I don't like technical trading. I prefer to do it because I see something happening in the market that gives me a reason to think we should be selling. Now the S&P went up. Not looking as likely. I'll take one off if I can. If I can fill that, I might not fill it. See, I'm back to a little profit. So I'd like to get out with my little profit and be happy. Come on. So frustrating, but you got to do it. I mean, you got to get your numbers. You know, I don't have a good enough reason. Oh, there it goes. I don't have. Oh, look at that. Now it flies down. Isn't that funny? Now I'm back to where I was. Oh, Trump's getting ready to speak. Good God. Oh well. There it goes. Okay, $40. I made $5 more on that before I got bored. So I still think it's good. If I was in the mood to short it, I would. But frankly, I've got the money tied up in the other one, so I don't want to I don't want to be all over the place with my bets. You know, so I'm just happy to get back at it. I just wasn't doing what I wanted to. It wasn't going down quickly. These guys don't seem that enthusiastic about breaking down, so I just got back to even, got out. That's it. All right, but hopefully it was a productive day for you guys. We made a little bit of money, and hopefully we'll make some more on those other ones, on the oils. We'll see what happens. All right, so no thingy next week, and we will do it all again 2 weeks from now. All right, but thanks for coming, everybody. Uh-oh. What is you guys with the last-minute thing? Oh, you just signed up, David. I'm sorry. I shouldn't have been mean to you. I hope you're in the PSW chat, but it is so important that you learn not to do what that is. It's like we do not buy options. We sell options. That's where the money is. And we have that video, Be the House. Look at that strategy guide on Phil Stock World. Look at our education section. Get up on the basics because it's really important. But that'll mostly emphasize, like, don't do that. Don't buy long calls. Don't buy long puts unless you have a really good reason. That's not how we play things. We play the exact opposite of that. We're the guys selling you those puts and selling you those calls. The May says, what are my thoughts on Cisco? I love Cisco long term. I don't think they're cheap, though, are they? You guys, I need to save these things to the end. It's like I got to get out of here. No, Cisco's gotten it. Yeah, I like Cisco. I don't think there's anything wrong with them. I would not bet against them, but I also wouldn't pay $40 for them. I hope they come down to 32. If they come down to 32, I'll be screaming to buy it. And yes, you could construct something, but look, a stock like that, Cisco, IBM's another example. IBM's too high right now. Actually, IBM's not that bad. They came down a bit, but. So, stocks like IBM, Cisco, Apple, whatever, AT&T, I know I want, IBM's right where we like to buy. 150 is where we like to buy IBM. It's like I know I want it, but I want it when it goes on sale. I don't want, there's lots of things I want in life, but I'm not motivated to buy them. Like every time I go to a store, I don't buy everything in the store just because I kind of want it. It's like I want a new wok. I love cooking in the wok. I want a new wok. I want a laser TV. They have these cool laser TVs now. I want I want nice shirts or a jacket. But just because I want it doesn't mean every time I go in the store that has a jacket I'm going to buy it, right? I buy it if there's a sale. I don't need it. I want it. You don't need Cisco. You don't need IBM. You don't need Apple. Put a list up of the things you want, and when they go on sale, that's when you buy them. And sale doesn't mean coming off the ridiculous high. Sale means a real sale, when it's a seriously good price that you haven't seen in a very long time. So with IBM, a sale would be 140, would be a sale. It's been at 140. It's not unreasonable to think it might get to 140. That's a sale. I'm already capitulating where I'll probably get in at 150. But that's when I want to buy them. I want to buy them when it's getting cheaper. And so Cisco at 40 is too high. It's not on sale. In fact, it's compared to where it was at the beginning of the year, it's up 50%. Or 30-something%. 35 is up 33%. So I don't want to pay 33% more than somebody paid last year. Or somebody paid in frickin' August. They know. I saw it in August on sale for 30. I don't want to buy it now for 39. That doesn't appeal to me. And I don't care if you want to say, oh, well, but they did this and they got that and blah, blah, blah. Doesn't matter. Every company's got a story. Sometimes they have a good story, sometimes they have a bad story. I want to wait until Cisco has a bad story, and then my argument's going to be, oh, yeah, but they've got this and that going for them. Okay, that's how it works. When Cisco does have a story, that's when I want to look at it. Why is that ringing? It's supposed to be over. Oh. No, that one does ring. Okay. See, it's time I'm supposed to be off this thing. So any stock they have good stories and they have bad stories, and they change over time. And I want to buy them when they're down. I want to buy stocks that I like that had a problem. Okay, it's like a kid can drive a car for 5 years and gets into one accident, and their insurance goes up. Now, if I'm selling insurance, I actually would like to give that kid insurance at the higher price. That's an interesting business idea I have, actually. But, in other words, when people do have accidents, that's the time, if they have a generally good driving history and they have an accident, instead of raising their rate, that's the time I want to go to these guys and say, hey, your company's trying to raise your rate, but I'm willing to overlook your accident and give you a better policy. Because the history of that person is good driving. They have an accident, that's an accident. If they're drunk, that's different. But I'm saying if they have an accident that comes out of the blue, you say, okay, you know what, this isn't that bad. I'll give you insurance at a good price. And that's what this is. You just want to wait. You want to wait for the accident where a good company has a problem. Then you get in and buy them because you say, overall, this is a good company. You're doing the opposite. You're saying, here's a good company that it's on a hot streak, and you're going to bet it has a hotter streak. That's way less likely. And I know it's hard. I know it's like against human tendency because people tend to think when something starts going down, it's going to go down forever. Like here, I was banging the table on Cisco when it came down near 20. I was like, oh my God, how could you not buy this company down here? At 30-something, though, I lost interest. I'm like, okay, so now it's fairly valued. At 40, I've got no interest. And you've got to get into that mindset where you buy things when they're cheap. There are thousands of companies you can buy. You don't have to chase the ones that have already gone up a lot. All right, now we really got to stop. All right, guys. That's my thoughts on Cisco, and we're all done. And David, we will work with you and get you in a good mindset. And May will work with you too and get you to learn how to be a bargain shopper. All right? So thanks for coming, everybody. Have a wonderful holidays. Happy Christmas, Happy New Year's, and all that. And I'll see you in 2018. All right? Take care.